Hello, good evening, everyone. This is Alex from MarketWise Asia. Good to see every one of you here. So once again, good evening, ladies and gentlemen, traders and investors. So before I kickstart this session, very important first, can you guys hear me? Because I just changed a new mic today. So really just to make sure that you guys can hear me. If you can hear me, okay, just say hi to me or type yes in the comments. Can hear me loud and clear because I just changed to a new wireless mic over here. So I can move it around. So I can just sit here. I can go very far away. I think you guys can still hear me loud and clear, right? So I'm not restricted by the wire. Okay, so this is a lapel mic. Anyway, if you guys are interested to get this lapel mic, right? So this is actually from Boya, In case you're interested, so for your own Zoom meetings, or some whatever it is, okay, webinars, meetings. Okay, this is, I think so far it's pretty good, Okay, so this is actually Boya. Okay, so I typed the brand in the comments box over here. So loud and clear, fantastic. Okay, hey, Yang. Okay, so let me take a look at the comments right now. Hello, Jane from South Africa. Okay, so Jolene Huiling, Dave, Juki, Kelvin, Faith, Eddie, Denise, okay, Christina, Kenny, okay, let me see, Ming Mak, okay, Ben, Chita, okay, Muru, Singhuat, okay, fantastic, Willing, Desmond, okay, all right, so ZJ, okay, so let's kickstart this session, okay, so maybe let's try to go a bit slower, but I also hope that I can finish this session in just an hour's time. Let's see whether I can do it. So as I mentioned in my Telegram channel, right? So today I actually want to share with you, okay, I say that heads up for tonight's live stream. I'm sharing with you a tool that helps to measure the extent to which a stock or any other security price when the movement is very stretched. Okay, so how extended the move is. Okay, and I also share with you a visually intuitive way to detect sector rotation. So I'm sure you know, if you have been following the market is kind of extended. So I'll show you a very simple tool, okay, to show you how extended it is. Okay, if you're interested to know this tool, the indicator, and also the method to use to detect the sector rotation in a very visualized way, easy to spot, right? Just type me in the comments. Okay, all right. Can your Boya might be clip on rather you hold? Yeah, I'm clipping on to my jacket right now. It is clipping on to my shirt right now. Okay. Anyway, there are some knockoff or some OEM brand on this kind of wireless mic. This is not a Bluetooth mic. This is actually using the 2.4 gigahertz transmission. Okay, the kind of yeah. So it is not Bluetooth. Okay. All right. So let me just hide this. Okay, let's kickstart this session right now. So as usual, disclaimer first, whatever I share today is just for education and informational purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex could be wrong. So recently, I have been wrong. I was wrong. So please don't copy me. Okay. All right. So in fact, when it is very bullish, I got it wrong. When the market is not so clear cut, a bit, kind of choppy, whether it's not bullish, not bearish, that kind of thing, then I tends to get it right. When it's extremely bullish, I get it wrong. Okay, so let me try to zoom back. Okay, I get the screen right already. So please don't copy me. Please do your own due diligence. So before I kickstart again, Telegram channel, YouTube channel, Twitter, please follow and subscribe to all the various social channel over here. So Telegram, YouTube, Twitter, of course YouTube. If you are watching this on YouTube, okay, please. Jane says you can't hear any. You guys still can hear, right? I suppose there is no big issue over here, right? Okay, all right. So I think maybe Jane, okay, please. Maybe you can try to log in, log out, whatever it is. Go to as in exit and come back in again. Okay. All right. So yeah, let me post the link in the comments. Okay, I'll post it. All right. YouTube, if you are watching this on YouTube, please follow and subscribe. Okay. All right. Telegram, I share a lot of some of my price movers and breaking news also. So before I kick start, just give me 2 minutes of my time, okay, to let you know this Market Insights Trading Festival I mentioned last week. So this is the second time. Because this time around there is this in-person, session. Okay, so this is a physical face-to-face. So we are still doing quite a lot of preparation work, trying to get everything done. So please give us some time, but we are still in the pre-registration stage. Hopefully by next week, the site is up. But right now, just to let you know, okay, 15 July is virtual, 29 July is in person. So there's a gap of 2 weeks, okay? 15 July in person, 15 July virtual, 29 July is in person, and the pre-registration page, okay, it is over here. Let me post the link in the comments over here. You should see this link over here. So ignore this 15 and 16. So initially we were just thinking of 2 days virtual. So right now we have this added on session 29. It is the in-person. So keynote speaker Brian Shannon for the virtual session. Okay, so he is also the author of this famous book, The Anchor VWAP. It just launched this year only. And as I mentioned last week, I've been also using more of Anchor VWAP, a lot more this year. So I think he's the best person, okay, to teach you, to share with you this Anchor VWAP strategy and also the insights and how to apply it to your trading style. Okay, and 29 July, okay, I forget to add in my marker over here. Okay, yeah. So for the 29 July, right? 29 July, we also have another keynote speaker. So 29 July, it is by Rainer Teo. So for those who are in Singapore or who have been, watching YouTube for some time, and especially you are searching on YouTube, as in on trading, education videos and such, right? You might have, or you should have come across Rainer Teo. So Rainer Teo, it is the most followed trader in Singapore with 1.7 million YouTube subscribers. Okay, and as I mentioned, pre-register now, you get exclusive bonus materials and reports. And this bonus material is actually by him, Rainer Teo, this breakout stock trading system. So it is, I would say it's 99% exclusive, because Rainer told me that he just sent it out to a small group of people, very small group of people only. And other than that, he didn't actually send out to anyone else. Okay, so not to his YouTube subscribers, not to his list as well. So you can say that this is pretty exclusive. 99%, 99% of the people do not have this book. Okay, so this is like, okay, the breakout stock trading system over here. You can see that a lot of content over here. All right, the strategy he actually mentioned it inside. Okay, and there's some backtesting over here, how the results over here, the number of winning trades and such. So do pre-register it and you get this book for free. Okay, and of course if you do it now, you won't get it. So I have to prepare the thing. Once it is ready, I will send it to you guys first for those who pre-register for this event. So I'll post the link in the comments. All right. What is the process for the 29 session for non-Singaporean? Okay, so yeah, so Pei Wen, are you a Malaysian, right? If you're a Malaysian, then this is only for people residing in Singapore. So yeah, so the in-person only in Singapore, so it'll be held in Suntec. Okay, it'll be held in Suntec. All right, so yeah, so for those who are not living in Singapore, then I think you can't attend this session live. Okay, all right, so okay, I think 10 minutes already. Let's kickstart this session over here. So for those who just come on board, I welcome you. Please give me a like, share, or comment, if you could. Okay, this is to tell Facebook and YouTube algo that you want to see more of MarketWise Asia content in the future. Okay, so please do myself a favor and also do yourself a favor. Like, share, and subscribe. Okay, I would really appreciate that. Let your friends know. Okay, so major economic data released this week. This week full of economic data. Of course, at the start of the week, okay, the 13th of June, Tuesday, it is the CPI inflation data. Our expectation was 4.1 versus 4.1. So, I think nowadays inflation data is no longer kind of some major news that can rock the market. Okay, the expectation of inflation, okay, we are expecting it to come down. Okay, so 4.1 versus 4%. Okay, all right. So of course, I think the market also know about that. Okay, it is anticipating is also rally up all the way. And you know, on Wednesday, Thursday, okay, and in fact, the major one is the 15th of June. This is the Thursday one. Okay, FOMC statement. Of course, if you read the news, okay, Jerome Powell didn't actually hike. Okay, it is a pause, so stick to 5% to 5.25%. So it is, you know, 5 to 5.25%. No change, no hike. But okay, Jerome Powell said that, you know, there could be 2 more hikes in place until the end of the year. So 2 more hikes until the end of the year. All right. So of course, just now 10 p.m. Okay, this consumer sentiment data just came out. So actually, the sentiment is pretty bullish. Okay. So it's 63.9 versus 61.1, 60.1 forecast. And of course, today is actually not just OPEX. It is actually quadruple witching day. So for those who don't know what is quadruple witching day, it is where all the, you know, stock options, index options, you know, futures options all expire on the same day, on tonight's Friday. Okay, and I'm not sure whether do you remember me, okay, what did I say actually last week about the OPEX or the quad witching? I'm, I'm not sure you remember. Do you remember that I said that, you know, market tends to go, you know, higher towards the OPEX, and then you know, start to possibly, you know, okay, fall after the OPEX, or rather that the market tends to be weaker after the OPEX. So you can see that from the chart, right? Okay, the market this week, it is quite pretty strong. Do you remember or not? I'm not sure whether you remember. If you remember, just type yes in the comments. Red David said, "We'll do you a flavor." Yes, slip through my mouth. Flavor and favors, flavor and favor. Okay, yeah. I mentioned. If I'm not mistaken, I remember I mentioned that, you know, OPEX tends to be a bit stronger. After OPEX, the market tends to be weaker. Okay, later I try to explain this phenomenon if I have the time. Okay, and it is actually not that easy to explain. I hope I can explain as simply as possible. Okay. Okay. So these are the major economic data. So as I mentioned, FOMC, this dot plot, end of the year, they're expecting 2 more hikes. So brings the rate to 5.6%. So this is the short-term link over here. So this is basically the news are nothing much. Okay. So this is the dot plot over here. So this is basically the summary, and, you know, dot plot. This is the dot plot. Okay, basically all the FOMC members, okay, find that, you know, it is about 5.6% around that region. So, you know, and Jerome Powell has mentioned that in July, it is most likely, I think, should be a live FOMC session. And I think based on the futures data that we have, okay, based on the CME hike tool, okay, next FOMC meeting in 40 days. Okay, next FOMC in 40 days. So the next meeting is on the 26th of July over here. So right now, the current rate is 5 to 5.25%. So, you know, I believe the market is pricing in that, you know, the Fed will hike another 0.25%, 0.25%, okay, in July FOMC. So right now, the probability is about 75% chance that you hike another 25 basis point. Okay, so if you understand what I'm trying to say, just type 25 in the comments in July, 25 basis points. So entertain me, okay, engage with me, okay, this will do you good as well. Let Facebook know that you engage with me, so that in the future, okay, even if you miss my email, miss my Telegram channel, at least when you browse Facebook and YouTube will still show you my content, okay, on your feed. All right, so I think that, so as I mentioned, right, okay, before I go into that, as I mentioned, the mistake that I made, right? So I think I just to let you know, okay, I think some of the, you know, gurus, you know, I think a lot of times they only just tell you with their winning trade, tell you they're always right. But I want to let you know that the mistake I made, okay, I believe, okay, from the start, and actually, in fact, from last year December to April, I think I was still pretty spot on, okay. But this June, okay, the market is really too bullish, okay. And I think I put too much bias on the seasonals for the June's data. So traditionally, June is actually a bearish month, okay. I don't talk about pre-election year. Pre-election year, it tends to be more bullish. But okay, judging from the price action in May, okay, until June, I thought that it actually is really, really bullish. Okay, I think it cannot go much higher. I think there should be a correction. So in fact, I did 1 or 2 shots. Okay, it didn't work out. And in fact, some of the trades I did, I think last week I mentioned about 1 or 2 trades. Like for example, the Moo is this Moo things. This is the every business. Okay, I went for a short. Okay, it didn't work out as well. So I cut loss as well. So again, this is just another one of the trade as well. So it doesn't matter. But one of the mistakes I made that I think I placed too much emphasis on the seasonal. So I was expecting price to come down, but it didn't. Okay, so this is the mistake I made. But again, even though I made this mistake, okay, at this moment in time, TLT, I'm still holding. Okay, I think TLT, it is still pretty okay. TLT is still pretty okay. It didn't hit my stop loss. Okay, all right. So but as I mentioned, right, the market. Okay, this is the Nasdaq futures. This is the S&P futures. Let's go to S&P. Okay. As I mentioned, right now at this moment in time, go long also doesn't seem right. Go short also doesn't seem right. Okay, in Mandarin, in Chinese, 买也不是，卖也不是 that kind of thing. Okay, so I'm just saying put, but I will show you what I had a new position. I will show you what I do. Okay, all right. Yeah, I'll show you what I do. Okay, all right. So this one can, so this is the mistake. I just want to be more openly or more transparent, okay. But okay, but the other trades that I show you, like the commodities that I show you, I think last week was doing pretty okay. Plus the forex, of course, not all are winning, but net, okay, it is still profitable. Okay, net is still profitable. Henry say, 不三不四, yeah, not 3, not 4. I understand what you say. 不三不四, okay. So again, okay, if you actually log on to Twitter, watch on Twitter, read on Twitter, whatever it is, okay, you might still see that there are actually, traders, okay, who are still very bearish on the market, okay. The higher the index go, the more bearish it is. They still justify, say, why it is still bearish. And this guru or these Twitter accounts are not just, few hundred followers or these 5 figures one or 5 figures, okay, 5 figures, 6 figures, the kind of followers, okay. Of course, the sentiment is getting more and more bullish, but at this point in time, it is still not 100% bullish yet, okay. There's still some bears out there, but okay, just to let you know, okay, the breadth and some of the sentiment, it is moving towards the market is in a bull market, okay. All right, so before I go into that, okay, guess how many made new high in the S&P? Okay, you might say that the market, it is still a bear market rally or whatever it is, but the S&P, out of the 500 stocks, there are more and more new stocks making new high as in, ATH, all-time high, more and more, okay. How many are making? Make a guess. Can you type the number? How many? Okay. Before I go into that, like while you type the answer, right, there is asking, do you mean you disagree with Larry who says short term from now till next month? I didn't disagree. Okay. In fact, short term I'm still bearish, but just that I didn't have last week I don't have any position. Just hold on, I didn't have position. Just stay put lah. Okay. For equities, I didn't do anything. Staying on the sideline to me is also a position. Okay. I can't see an opportunities, so I stay out. But I'm still bearish short term. Short term only, short term. Okay. Tarun say 8. S&P only got 500 stocks. Cannot be more than 500. All right. So how many make new highs in S&P? Okay. So in fact, if you go to Reuters over here, okay, so this is the site. Okay, S&P leaps to the highest close in 40 months. Okay, blah 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 blah. Not important. Okay, you can read through the thing. Blah blah blah. Okay, I want to find. Okay, the S&P posted 48 new highs. Okay, and no new lows. And the Nasdaq recorded 80 new highs and 72 new lows. So how do you get this data in a very simple manner. Okay, in fact, I share with you guys before. So okay, so this is the stock chart gallery. Is it DP gallery? Okay, DP gallery view over here. Yeah. Okay, I mentioned before, I think previously. Okay, all right, this is the DP gallery. Okay, I can post the link in the comments. This is actually the shortener link. So you just type bit.ly market overview. I posted in the chart, okay, in the chat, okay. It is the shortened link, but the actual link is from stockcharts.com. So I'll post the link in the comments. So I mentioned before, okay, this page, this stock chart page, right? You can know the trend, you can know the condition, you can know the breadth, you can know the sentiment. Quite a lot of things over here. You can see over here, trend, condition, breadth, sentiment. If you are using a free account, you can only see the S&P 500. If you're using a paid account, you can see the Dow Jones, Nasdaq, and the S&P 500. I think the S&P 500, it is good enough over here. Okay. So there are a lot of things over here. So I want to zoom into this. Okay, this net new 52 weeks high. All right. So can you see over here this S&P new high over here? Let me zoom in. All right. So in 48 or 49, right? So I think this is based on yesterday. So this is based on yesterday. So you can see that. You see over here, all right, 49, 49, somewhere around there. So there are 49 new highs in the S&P 500, all-time high. So you also can see that while the market is going up, okay, the new highs is also going up. This is pretty bullish. And you can see that the new lows is also getting lower already. You can see that this a lot of stocks have had new lows. Okay, so it's getting lower and it's getting lower. Okay, and it's getting lower here. So this is a good one. So you guys know this side now. All right, this side now. And if you look at the market breadth over here, right, at one glance also, this is using EMA. All right, so percentage of stocks above their 20 EMA, 50 EMA, and 200 EMA. Okay, of course, what people say on the news is that, oh, there are only 7 big cap stocks that are driving the market. It is true that the big cap stocks are really driving the market in a way that they really went up a lot higher than the rest of the stock. But it doesn't mean that the rest of the stocks didn't move up as well. The rest of the stock do move up as well. So the mega cap, okay, the mega cap move up. Okay, the normal, mid cap, small cap, they move up as well. Just that maybe not move up as extensively as the mega cap stocks, but they do generally go higher as well. Okay, so how do you see that? You can see that let's take this S&P stock above 50 EMA. You can see that right now there are about 6. Prior to that is about only 20+%. So right now it is about 75%. So in fact, 75% of all the S&P 500 stocks, okay, they are above the 50 days moving average. So it is actually going up. So generally the market is heading higher, and percentage of stocks above the 200-day MA. So initially from a 40% point, okay, now it's to 64% really, 64%. So actually the market actually, all in all, the broad market, it is participating. Okay, all right. So at this point in time, can you understand what I'm trying to say? Everything is all good. Okay, if everything is all good, just type good in the comments. Okay, just type good in the comments. Can okay, well, I'll take a sip of water and take a break first. Okay, everything good? Can okay, so another one, you can see that the market breadth is actually from barchart.com. All right, I mentioned before also, but this is the shortener link. The shortener link is actually this, okay, bit.ly market breadth. So I also mentioned before previously, but I think maybe for those who are new might not know. So you can also see that percentage of stocks above their moving average and such. Okay, so all right, all this you can see S&P, the consumer discretionary and such. So all these are moving higher and higher up. All right, and if you actually look at this, like for example, if you click on the number over here, right, 75% over here, click on it, right? Of course, there's add, you can close it. So you can see that like this article, right, SYFI. So you put in trading view SYFI. I can also get it into trading view. So percentage of stocks above the 50 days moving average. You can see that the data is from bar chart over here. Okay. All right. So in other than this, I want to show you that, but in the short term, okay. All right, 20 days moving average, it is, you can see that most of it is above 80 to 90%. So it is actually pretty overextended over here. All right. So this is the market breadth that I put it in my trading view over here. Okay, so like for example, this is the consumer discretionary. You can do a line chart. Okay, all these they are moving up. Okay, which means that a lot of stocks are participating as well. Okay, but of course there are certain in certain sectors, it is I think already there already. So for example, like the industrial stocks, how high can they go? Okay, this is at the top already, so it's somewhere around there. So you have to be careful. But other than that, I think this is a tool to let you know. Okay, can. Yeah, so this is the one that I want to share with you over here, right? How extended the move is. Okay, the tool that I am wanting to share with you, right? It is actually okay. All right, this thing called the distance. This is actually a derivative of the moving average. So distance from moving average. How far is it from the MA? And as a guideline, okay, I tend to use the 50 MA, okay, as a guideline, but you can change it, okay, you can change it. So how do you get this? Okay, this is more like oscillator. I'll show you okay, how extended the move is distance from the MA 50 days. Okay, so from your trading view, right, when you search for your indicator, okay, you can search for indicator, you can either you press the icon, okay, or you just press the slash button now, okay, right? You can just search from distance from moving average. You can see quite a few one. All right. So one way you can use is the percentage difference. Percentage distance. Percentage distance from MA. Percentage distance from moving average. And you can get this. This script is a custom script, so it is written by this gentleman called DKN Crypto. You can see that more than about 500 people actually use this indicator, right? Percentage distance from MA by DKN Crypto. All right, you can just apply it. All right. You can do the settings over here. Right? By default, it's 50. So you can do the style. You can put it black for easier to see over here. The top, I also want to make it thicker over here. Okay, so it's a distance away from the moving average over here. Okay, so you can see that of course I'm using the breadth, so I'm going to go back to the watch list. So this is the S&P 500 over here. Okay, so can you see that it is where is the top? Where's the top? Okay, so you can see that top. Okay, somewhere around here, right? Top somewhere around here, right? Right. So can you see that it is pretty stretched already? You can see that somewhere around here, okay, somewhere around here, somewhere around here, around here, the market will tend to do a. Can I see over here when it's more than about 10% away from moving average, okay, or the Nasdaq, okay, 10% away from the moving average. Okay, I will use Nasdaq as a example because Nasdaq is outperformed the best. It moved a lot more. All right, so you can see that somewhere around here. Right, so about 10% away from the moving average. So right now over here also, you can see that. Okay, there's a correction over here. Then when price actually about 10% away from the moving average. Okay, so it is also a correction. Okay, and somewhere around here, overly stretched. also about near the 10% mark over here. All right. So market had a correction over here. So right now we are also about there. Okay. Again, it doesn't mean that the market will continue, will definitely have to come down. The market can still defy gravity and still continue to go higher, can still continue to go higher. Okay. All right. So this is one way that you can use it. So you can see that, distance away from the move. In fact, we are even another zone that you can see that is actually from here. So these are the below about 7%. It's really kind of very far away from the moving average. So it tends to mean revert. But of course, when the sentiment is really bullish, the market can overstretch. But just to let you know, this indicator can show you how far away it is away from the moving average. So have a gauge of how extended it is. Okay, another one that you can use, it is actually, okay, not the symbol. Right, so this is the distance from moving average. This is without the percent. Okay, this is just based on numbers. Okay, I isolate the numbers, not the percentage wise. So distance from moving average is from this gentleman called Rafael FRJ. I don't know how to pronounce it. Okay, you can just search for that distance. Okay, you come out already. RAPHAUFRJ. So you can just apply it. Okay, this is more flexible. So you can put SMA, EMA, and such. For example, if you do not SMA, simple moving average, you can actually put EMA as well. And MA, you do not 50, you can put 20, you can put 100, whatever it is. But typically, I'll put 50 lah. Okay. All right. Then you change. Okay. All right. And then once again, you can do the style. You can change it to maybe, for example, a black line for easy visibility. Okay. And then done. Yeah, done. So once again, all right, it is also pretty extended. You can see that we are near at the top already. So it is quite extended. In fact, it exceeded. So the prior time it went up so high was actually based on this EMA. It is actually in 2020. Okay, 2020 after the COVID rally, after the COVID sell off, then it rallied. Right? So this was the time over here, alternate V. Okay, so this part over here overstretched. Okay, and then you can see from the chart over here, and subsequently, right after the COVID bull market in September 2020, this was a pretty huge correction over here, and then it dropped from the top to the bottom about 13%. 13%. Okay. Of course, I'm not saying that the market will drop 13% that kind of, but it just tells me that right now we are also in a overly stretch mode. Okay. So if you understand how to use this indicator, distance away from the moving average, right? Okay. Just type letter D in the comments. All right. Darius, yes, it works for individual stocks as well. If you want to see how stretched, okay, the stock is based on the historical data, the previous encounter, you can do that also. I'm using this as an index. Once again, I just let you know, okay, you go to the indicator page, right? Just type distance, DIST, okay, most likely you'll come out already. Okay, you just search, okay, distance from moving average, okay. The one that I'm using is DKN crypto, and the other one I'm using is actually Rafael FRJ. Okay, Rafael FRJ and DKNY crypto. Okay, your star signal never show up. It show up, just that I never put. Okay, in fact last week I already put already, right? It is somewhere. I think Nasdaq. It is somewhere near the top. The star signal was actually where is it? The star signal was somewhere around here. Somewhere around, not at the exact top, but somewhere around here. It showed already, just I didn't put the star signal now. Okay, for the past few times, the star signal doesn't really work that effectively. So it doesn't mean revert so fast. The market is really bullish. Okay, so only so few of you type D only. All right. Can you guys type D lah? Can engage with me or not? Just type letter D. Can or not? Very fast, okay. Good question. Okay, Chris Chow said between these two distance, which one is preferred? I actually prefer to use the distance, percentage distance from the movement. It tells me absolute percentage. So I just know exactly how high it is lah. Okay, because the normal one it doesn't tell me just an absolute number. Okay, all right. So I don't know how far away it is lah. Okay, I can only gauge based on the lines over here. Okay. All right, so if you find this useful, find this too useful, or if you are too shy to just type D, right? At least give me a like, share, or comments. I can, or at least give me a like, can or at least give me a like. All right, at least give me a like. Can? Okay. All right. The next one that I'm going to share with you, it is actually this. All right. So sector rotation, visualize. Sector rotation, visualize. I have been using this for quite some time. I just didn't show this to you guys. So somehow today, I just want to show you guys. Okay. So maybe it could be just one time. So as I mentioned in the Telegram, all right, I said that sometimes I share this is just one-off share, which I won't be revisiting frequently in future live stream. So you catch it, you catch it. If you don't catch it, then it doesn't matter. Okay, all right. So this thing, all right, it is actually this thing called the RRG. Okay, RRG, RRG. Okay, this is actually not religious rehabilitation group. This one, this is a sponsored post. Not this one, not this one, not this one. RRG charts, sorry, RRG charts. It is relative rotation graph. Relative rotation graph. RRG charts. This is from stockcharts.com. Anyway, by the way, okay, this stockcharts.com, this RRG, free user, you can't really see much. It has to be a paid user. Okay, sorry about that. I don't control stock charts. Okay, you have to subscribe to stock charts to use it. Okay, but under this, okay, stock chart, all right. Under this, my thing is this over here, RRG chart over here. Okay, all right. So if you are a free user, let me go to incognito. Let me go to incognito mode first. Okay, so if you are a free user, right, you're not logged in, right, you can only see the indices. You can only see the indices to see how is it improving index, leading index, lagging index, or gaining. So okay, right now maybe you still don't understand what share with you, huh? So this I can see a lot of things. So for example, over here, you guys can see the chart, right? Okay, so all right, so this is the RRG curve. So I will let you know, I will show you how it works. All right, so sector rotation, so always go from a weak sector, then start to improve, then go to leading sector or leading industry, then weaken. Okay, so this is the green one is leading, then weakening, then lagging, then improving. So for example, normally the rotation will do like the sector rotation. So it's really like it is really like rotating. Okay, so that for example, technology is leading. Okay, then after that, start to weaken again. Okay, then after that you go to it's lagging compared to other sectors. Then after that, one round again, starting then the tech start to lead again. Then after that back to start to improve again, and then start to lead again. Kind of something like that, something like that, So in this case, you can choose the group, right? I can choose the sectors, S&P 500 sectors. So before I go into that, let me know which sectors. There are 11 sectors, right? Technology, comms, and all this, okay? Industrial, consumer staples, consumer discretionary, and such, right? Which are the sectors that is leading right now? Which are the sectors that is leading right now? Okay, let me know in the comment. Okay, which are the sectors you think that is lagging? Okay, lagging right now. You can also type in the comments. Okay, let me know. Okay, how about type the leading one? Which one that's leading? Okay, I'm sure many of you sure type one. So it's XLK. Okay, any other sectors other than the XLK? All right, most of you should type that one. Okay, Henry say energy is lagging. Okay, XLE is lagging. Health sector XLE, XLV is lagging. Okay, lagging. So based on what you have been seeing in the market or whatever method you use, roughly right? Okay, it is how actually you put it visually into the chart, Okay, so I select the US S&P sector. Or the 1 year I keep it as such. I put it in daily. Then I click update. So can you see this? Okay, in fact, okay, XLK starting to weaken already. Technology, okay, XLC communications like Facebook and such start to weaken already. Okay, all right. Weakening doesn't mean that it is weak. It is weak. Okay, weakening and weak is different thing. Weakening means that it is used to be a strong sector. Now it's weakening. It's not as strong as previously, but it is still strong. Okay, can you understand what I'm trying to say? If you understand, right? Just type yes in the comments. Weakening doesn't mean that it is weak. Lagging, then it's weak. So if you can't differentiate, okay, you see that green is good, okay, red is bad. Green is good, red is bad. So it tends to move like that. Okay, improving, I think you all know lah. Okay, it's simple English. Okay, weakening. So can you see that right now, the consumer discretionary, it is still leading the market. The improving one, which is this blue one over here, all right, can you see that, prior to that, the lagging was actually the, like for example, you mentioned XLV, right? XLV, the health, right? So XLV, in fact, it went from lagging, right? It back to going to improving right now, okay? And the energy, what's the energy? Energy, it is also starting to improve more, okay? So if you look at this over here on the right hand side, you can actually scroll back. Okay, can scroll back. Okay, scroll from 2023, the start of the year over here. Start of the year, you observe this this RRG chart over here. All right, you do kind of animation. Now can see over here. So I start to move. Okay, as I move from start of 2023 to until now. Can you see? Can you see or not? So it tends to move like that, right? It tends to move like that. I show one more time. So let's go from, okay, move back to last year, July. Okay, and it start to move again. You guys can see. Can see or not? Can, okay. All right. So again, I just want to let you know, like little worm moving, little worms or little sperms. Little worms or little sperms moving. I'm just teasing. Okay, I don't come and complain to me. So, Alex, talk about dirty jokes. Anyway, yeah. Okay. But once again, I'll let you know. It doesn't mean that sector rotation you always move in a perfect circle. Okay. It doesn't mean that it can sometimes from weakening to immediately to leading, or it can move from weakening then immediately go to improving, or then go to leading, or it can suddenly go from leading, right, then suddenly go to lagging. Okay, or it can leading, okay, then go to weakening, okay, then lagging, then suddenly go back to leading again. Okay, you understand what I'm trying to say? It does not mean that it always have to go into a perfect clockwise direction, or anti-clockwise for that matter. Okay, it can go anywhere it wants. Okay, any place that it wants, but generally, based on the movement over here, you can see that it's generally like, worms moving, sperms moving. It tends to move in that kind, right? Okay, but I also want to let you know that, okay, this RRG graph, it is lagging, a bit lagging, because first of all, the market has to move first. The sector, the industry have to move first. Then there's some mathematical calculation formula behind it. Then it will start to show. So by the time it start to go into, maybe for example, XLI over here. For example, you can see that this XLI, it is over here from improving to leading. Most likely it also already went up quite a bit already. So for example, this XLI over here. Okay, XLY. I can see the XLI, it really start to move high up already. So the market has to move first. So in any case, you want to know, okay, how does this RRG chart works? You can just Google RRG charts over here. Okay, then you can go to this stock chart. Okay, the second one over here, RRG charts, the explanation. So Okay, so you can read through how it works. I don't have time to spend through how it works, but basically there are some formula. It is based on the relative I think it's relative strength ratio. Okay, comparing between each other, the relative strength ratio and also the relative strength momentum. So basically it's ratio plus momentum plus some calculation to get this RRG. Okay, so what are the factors that affect the rotation? It's not important now. Okay, in a bull market, healthy is that one sector is overly bought, money flow back to some of the underperformed sectors. Okay, what affects factors? Okay, all right. So money tend to flow like that. Okay, once overperforming already, the fund manager, okay, come back to find there's more undervalue or there's not being much, then rotate. That kind of thing. In a healthy bull market, it is like that. Okay, and generally, not all sectors will tend to move together. Okay, and of course, you can also see that right now, for example, that maybe XLV, maybe that XLV, it is improving. Okay, XLV improving, but it doesn't mean that all the health stocks are good or are leading. Okay, so you can also subdivide into the individual sector. So for example, XLV members over here. Okay, XLV members over here. They can see that all the stocks of the XLV are here. You can see that Moderna, CVS, all these are lagging already. Okay, so the one that are leading right now is the green color one, or improving. Okay, so for those that are really leading, they can be a bit too strong, or you might be a bit too late already. So I like to look at those improving or just heading into the leading one. So for example, like Cigna, Centene, Baxter, Johnson & Johnson, United Health, they are still improving. So you can see that over here. All right, so sorry, change to daily. Change to daily. Then you can just click update over here. Okay, so you can see that the one that are leading, or a lot over here, can check it out, like Abort, Zotis, AbbVie, okay, all these are improving. So again, you can see that it tends to move like that, individual stocks. All right. Again, this is just a guideline. It lets you have a bird's eye view on what is actually moving. All your trigger, whatever, how to buy, how to sell, it all really depends on you also. Okay, and not only that, it can also have other things like composite, growth value. For example, like international ETF, for example. Okay, international ETF. You can go back to daily. So at one glance, you also know that, hey, actually, which country are actually leading. I am sure right now you know that. No, I'm sure. If you actually follow the market, you know that Japan indices actually is performing very good, right? It is somewhere going to hit the all-time high, I think 20 years ago already. Okay, so you can see that Japan is leading. All right, the rest improving one is Belgium, France, and all this stuff. Malaysia, Netherlands, Switzerland, these are the lagging one. So you can spot a lot of things over here. Okay, and what else? A lot of things are, what else? Yield curve one also have lah, currencies also have lah, and growth value also have lah. Again, this is only applicable for those who have a paying account. Again, okay, if you want to try, I don't make any money. Okay, I'm not asking you to go and enroll in this or subscribe. But if you really find it useful to try it out, you can try for 1 month, can try for 2 months and see whether it is useful to you or not. After that, if you think it's not useful to you, then just unsubscribe. No to pay for 1 year lah. Stockchart.com lah. Okay. What is the subscription? I think about the most basic one is about $15 per month. Okay, the most basic one is about 15. I think $14.95. Okay, about $15 a month. You can try for 1 month and 2 months. Up to you lah. Entirely up to you lah. Okay. 1 month, 2 months, you don't find useful, you can just do subscribe. Okay, up to you. Okay. Anyway, I did just sharing with you. I don't make any money from it. Okay. How many of you learn new things today? If you learn new things today, or you have never heard of it, you find it, something new and useful to you, just type RRG in the comments, or you can just give me a like, share, or comments, or just type RRG in the comments. Should be something new lah, okay? I don't think a lot of you know lah. I never shared before. I never shared before, okay? Henry is not free, it is paid, about $15 per month. Something new, right? Should be something new, right? Yeah. I think this is one time only. One time only. So maybe next week or so I won't talk about RRG again already. So if you catch it, you catch it. Yeah, I think there's a trial, right? There's a trial. There's a trial. You can just try out 1 month free, okay, and just see how it goes lah. Okay, can. What we do? Quadruple witching day. So last week I actually mentioned that options expiry tends to, on that week before the options expiry, it tends to move higher, and after that, after the options expired, okay, the market tends to be weaker. So I try to do some research on that. There are some data over here. So from this gentleman, or Jeff Hirsch, okay, so he's the guy who write the almanac book, okay, all right, stock almanac book, and his data based on June's quad reaching OPEX, right? Okay, of course there's volatility. I think there's a lot of numbers here, okay, not important, but generally, okay, you can see that options expiry day, I think it's a bit too small, okay, but not important. You can just follow my cursor. Options expiry day, median, okay, average, on the average, right, it is down a little bit, okay, it is down, okay. The OPEX week itself, it is down, okay, but yeah, but the week after, okay, that one is the more important one. It tends to drop a bit more. So average is down. June, it is like that. Another one that I found, it is this site called they do some back tests on the quadruple witching. I can share with you the link over here. I'll post the link in the comments. The comments over here. Okay, so what it is, bullish or bearish, backtest, everything. You can go and read it. But the important thing it is, let me try to scroll it down. Let me see. Where is it? So is quad reaching day bullish or bearish? All right, on the day itself, can you see the equity curve look like that? So you can see that it is actually bearish. The average loss per trade is 0.1% and the win rate is only 51%. So how they do that, it is they assume that Thursday, okay, all right, before quotation, and you buy at the close and you close it on Friday itself and hold for 24 hours, right? It is actually bearish, and the quad witching week itself, is it bullish or bearish? Okay, so like from Monday to Friday, so the whole week, is it bullish or bearish? So on the back testing, right, on the week itself, it is actually bullish. So from Monday to Friday, so basically it's this Monday, the current Monday, this week Monday to right now Friday, okay, it is actually bullish, okay, positive average of 0.45%. Okay, so but Friday itself is negative. So Monday to Thursday, it tends to have quite a positive rate. Okay, can you see over here? And this one more important, more important. And then what is the return the week after OPEX, the quadruple witching? So back test again, the equity curve is like that. The week after quad. Okay, and down is a negative 0.05%. So all in all, it is after the quad witching day is negative. Quad witching day itself today, Friday, it tends to be negative. This is just based on historical data. It doesn't mean that every single type is going to be the truth. Okay. All right. So I think Kevin mentioned that. Can you talk about? I nearly forgot, but it's nearly 1 hour already. Also, okay. Talk about the VVIX. Okay, so talking about that, I think the market internals that I'm looking at, it is actually VVIX over here. Let me go through that. Okay. You all got time or not? You got time, I can maybe stretch until 1 hour 15 minutes. So give me some time, maybe until 12:45. I think that's the most. Okay. Okay, so this is the VVIX over SPY over here. Can just go to the line chart over here. Okay, so this is the VVIX over VIX ratio over here. Previously I mentioned that, you know, internal wise it looks okay, because, you know, while the previously or the S&P here is like, you know, ping pong, right? Not doing anywhere. The VVIX ratio has already surpassed that. It moved higher and it tends to lead the market itself, which is the S&P 500 lah. Okay, so I talked about that, I think 1 or 2 weeks ago. Yeah, it is still true. But I think it is moving a little bit too high, too fast for the VVIX. And you realize that, you know, if you look at the weekly chart for, I think to simplify for the VVIX, it tends to move within some range, all right, from between, you know, 2 to level 8, okay, from between, you know, level 2, reading 2 to reading 8. Of course, there's some very special occasion where it moves really out of the range over here, like, you know, at a 10. But generally, you can see that, you know, it tends to be at about 7, 8 regions, 7, 8 regions, 7 regions. This is the top. This is the top. This is the top. All right. And then the bottom, it is actually the about level 2, reading 2 lah. Okay, reading 2 or 3 lah. Okay, so you can see that we are actually somewhere very near the top already, very near the top already. Okay, very near the top already, somewhere near. So I am bearish short term. So can you see that, you know, when it is at the top over here, can you see over here it's at the top, no market had dropped. Okay, when it is at the top level about 7, reading 7 or 8, okay, reading about 7 or 8, it is at the top, the market start to drop again. So once again, when it is at a top over here, you go down, it is in the 2018, 2019, that kind of correction. So when it's at the top over here, okay, it is also had a correction over here. All right. So other than that, prior to that, although you really cannot see you because the movement here is too big, okay, but also the same thing as well. So what I'm just cautioning you is that it is somewhere near the top, near reading 7 already. So you need to go slow if you are kind of FOMO and wanting to, wow, bull market, I want to buy. At least for the short-term trade or mid-term trade, you need to be more careful on that. So it is kind of stretching to the upper band of the rubber band already. Okay? If you understand what I'm talking about, this VVIX or VIX ratio, just type VVIX in the comment. Can I understand so far? Okay? All right. Okay. And just want to let you know, okay, I mentioned that I want to let you know the position that I have, right? So I am starting to short the market already, starting to short. So this week, I never do anything on the equities front. I never do anything. Just loon, hold my horses. Didn't do anything. This time around, actually just now I'm starting to short a little bit of the market already. I actually shorted the Nasdaq. Yeah, okay. But again, my track record for this month is not very good. The track record for this one is not very good. So you need to be, don't copy me. I could be wrong. Again, it is just one part of my position. So it doesn't matter if I'm wrong or right. Right or wrong. I shorted the Nasdaq. I shorted the Nasdaq. Okay, I'm putting this on record. I have shorted the Nasdaq. I could be wrong. Once again, I shorted the Nasdaq futures using CFD. Not directly the futures, but the CFD futures. So not the ETF. Shorted the Nasdaq futures. Okay. Yeah. Ken, I could be wrong. Don't copy me. I could be wrong. All right. So I just want to share a view, right? So about this, why the options, the market tends to go up. Let me try to do, okay, naked chart. Okay, so as I mentioned, right, OPEX weeks, okay, before the options expiry, or of course, quote reaching, so the OPEX, the market tends to move a little bit higher, okay, because a lot of volume a lot of people are trading the options, and somehow the options market become they will say you should long the Nasdaq, then you go down. Or you see how it goes now, you see how it goes. Okay, so there are a lot more people trading the options market that it right now it kind of influence the index itself. Okay, options are derivative, but somehow it grows so big that it tends to affect the main index. So I don't know whether I can explain that simply, but I try to, because there's a lot of moving parts. I'm not that simple to explain, but I try to explain as simple as possible. So when are you ready for it or not? Okay, if you're ready, just type ready in the comments. Entertain me a bit. So when the market keep going up, right? Okay, of course, the fund managers, they are the funds, they are pretty happy, right? Make money. A lot of funds, they are actually go long only. They go long only. Okay, so a lot of funds, fund manager. Okay, all right, fund manager. They go long, right? They go long. This one can understand. Simple, right? Basically, they go long is to just buy the stocks, buy the index directly lah. Okay, all right. So happy, okay. At some point in time, the market keeps going up. The fund manager, expect a correction to come. Okay, so they cannot normally those fund managers, portfolio managers, okay, hedge fund, they are not short-term traders, so they hold for many months or many years. So they don't just, or they think a correction is coming, then they don't liquidate, they don't sell their position. Okay, so what do they do? Right? So they tend to, they will tend to, right? They tend to hedge their position, right? Right? They will tend to hedge their position. Okay, just in case the market come down. Okay, so they will need to hedge their position. And what can they do? All right, to hedge the position. What can they do to hedge the position? Maybe you can write down in the comments. Yeah, Katie say hedge. So how can they hedge? What can they do to hedge their position? Henry said options, right? Fantastic options. So what if they go long? They anticipate there is a correction, which means that the market goes down, right? So what they need to do in the options market, okay, Yu Heng say correctly, okay, they will buy puts, right? So if you buy puts, okay, right, you are anticipating the market will go down, right? So they make money from that, all right? So net, you are still hedging, okay? So your long position still intact, but short term wise hedging, okay, make some money, okay, all right, this one can understand, right? Buy put, right? But you need to understand that, okay, a lot of times the liquidity from the options market, okay, they have a market maker. There's a market maker to facilitate the buy sell. Okay, you buy, they sell you. You sell, they buy from you. Okay, to provide the liquidity. So we call that the options market maker lah, options market maker or options dealer, whatever you call it lah. I just call it market maker lah. I think most of you can understand market makers, right? So they are not there to make money. Okay, they are just there to provide liquidity. They make money by providing the earn money from the spreads lah. Okay, earn money from the spreads. Okay, they're not there to make money from a directional call. Okay, and okay, the hedge fund, okay, they buy puts, right? They buy puts, okay. Somebody has to sell to them. So who sell to them? Okay, the options market maker, all right, will sell them. You sell to the hedge funds. You buy, hedge fund buys ma. Somebody has to sell to the hedge fund ma. All right. So option market makers, they actually have a position. Okay, it is actually sell put. All right, I know at this point I can understand, right? They sell put, but you also need to understand, okay, if you sell put, you are being directional. If you just sell put alone, what does that mean? If you sell put, you are actually bullish, correct or not? If you sell put, so this is the price over here, this is the market over here, this is the price over here, and you sell your put over here. You sell put, which means that you are anticipating that price will not go to that level. Correct or not? If you sell put. So for those who don't know what is sell put, buy put, don't no need to worry. Doesn't matter. Just understand that sell put is actually bullish. Okay, sell put is actually bullish. And if you remember what I said, the options market makers, they are not out there to make money from directional calls. Okay, they are just mainly to facilitate the transaction so that there's liquidity and also earn from the spreads. Okay, so they are right now, they are already directional already, they're positioned already, right? They're positioned already. So they need to be what we call delta neutral. Okay, so they need to be neutral. They don't want to have too much exposure. So net, they need to be neutral. So what the specific term is called delta neutral. Okay, so they need to hedge their position. Okay, to become delta neutral. Delta, for those who don't know, is in one of the options grids where when if the stock price move $1, how much will the options price move? That's the delta. So if the stock price move up $1, okay, the option price move up 50 cents. That's 0.5 delta, like something like that. Okay. Essentially, if you don't know what's delta neutral, never mind. Essentially, it is just trying to make it neutral. They want to hedge their position as well. Okay. So if they are bullish, okay, sell put is bullish, okay. So how do they hedge? Okay. One of the method, okay, it is to short the indices. Okay. If they are bullish, right, compensate that to be delta neutral, okay, they can short the index. So they short the index directly to keep it delta neutral. Okay, so when they short the index, okay, they have hold the short position. Of course, they don't hold it. They hold for a period of time. They just short while they accumulate the all the sell put. All right. So at one point in time, you understand that when it is near the options expiry, when it's near the options expiry date, which is like this week or so, it is nearing to the options expiry date. So when it's nearing to the options expiring day, okay, the delta will drop. Okay, IV will also drop. The implied volatility will also drop. Okay, which means that they do need to hedge so much really. They do need to hedge so much really. And with that, okay, they do need to hedge so much. They can buy back their cover their short position really. They don't be neutral, right? Not. So IV drop, delta drop, everything drop, right? Okay, they do need to hedge so much. So when they have a short position on the index, okay, nearing to the expiry date, they need to cover. So when you cover your short position, you are actually buy back. You actually buy back the indexes. Okay, you actually buy back. And because you need to know they accumulate so much, right, along the way. So nearing the options expiry date, they buy back. That is why they cause the market, they tends to move up as well. Okay, because accumulate a lot of short position already along the way, but only nearing towards the options expiring like this week, okay, then they buy back all. Okay, this covering short position is buying back, and this buying will also lead to buying pressure, right? Buying pressure, it will cause the market to go up. So until the options expire, right? And then they have totally neutral, nothing already. Though they net cover all everything to have already. Then the market, it is free to move. No more hedging position from the hedge fund, no more hedging position from the options market maker. So after that, the market tends to be weaker. So the market itself, index itself, tends to move whatever they want, not under the influence of the options market maker anymore. Okay, all right. Can you understand what I'm trying to say or not? If you can understand, just type yes in the comments. I think it is overly simplified, but it is about that. I try to explain as simply as I can. Maybe not the best kind of explanation, but I hope you roughly get the idea. One last thought. So hedge fund, they want to buy, they long. Okay, they long. Market maker need to sell them the sell put. Okay, but basically sell put is bullish. To become delta neutral, okay, the option market maker, they have to short the index to become neutral. Okay, nearing to the expiry date, delta drop, IV drop, everything drop. Okay, then the options market maker, they don't have to hedge so much, and then they have to cover back their position, and they cover back the position, which means they have to buy back from the index itself. This buying back pressure will cause the indices to go up just right before the options expiry, which is like this week. And subsequently, after that, the market expire everything, okay, OPEX, the market is free to move again. Can? I hope I do a good job in trying to explain this. Can? Okay? I hope you learn something new from this. Okay, if you learn something new, just type yes in the comments. New, just type new, right? Just type new in the comments. Okay, then with that, oh, they have the self push, prior to that, they have the self push one, so they make some money already, kind of things. Okay, when the market start to go higher, that kind of thing. Okay, all right. Okay, so I think with that, let me see the market right now. The market today, it is okay. Russell 2000, it is naturally negative today. The mid cap, small cap, all these are negative today. In fact, can you see the S&P future is up positively, but the SPY actually is down a little bit. Not so often that we see this kind of inverse correlation. So one up, one down. So but anyway, yeah, I am expecting short term the market can need to come down a little bit, okay, but I could be wrong. The market can still continue to bulldoze all the way up. So yeah, but we will see how it goes. But generally, I just want to let you know that we are right now in a bull market. I feel that we are still in a bull market, and as mentioned, the Fed have already said that okay, they are going to hike 2 more times. As long as the Fed still continue to hike hawkish, I think the market, it is still okay. It is when the Fed start to pivot and start to lower the interest rate, I think I mentioned before, that is when you start to worry, because lowering interest rate, it is no good, which means that they're anticipating the economy is going to be bad, recession is coming and such. Okay, all right. So I think that is about all for today. 1 hour and 15 minutes. I don't want to go too long. Okay, and before you leave, okay, just want to let you know that this thing, okay, Market Insights Trading Festival. I'm going to change the name also, Market Insights Trading Festival. Okay, 15 July, 29 July in person. Please register for this event. I will post the link in the comments. So as I mentioned, right, those who pre-register will get the bonus from Rainer Teo. Rainer Teo will be the keynote speaker for the 29th of July in person one. So this will be, this will be the one that will be giving the bonuses. All right, the breakout stock trading system. And as I mentioned, right, 99% of the people do not have this book. So this is like more or less exclusive bonus for you guys. Okay, quite comprehensive, the data content over here. So if you pre-register, I will send it to you guys when it is ready. So we are still in the process of doing out the page, but you need to register it now lah. Okay, register now, and once it's ready, I'll send it to you guys. So once again, I'll post the link in the comments. Okay. And I think 1 hour 15 minutes ready. So yeah, so short term I'm still bullish, but it is fine. It is fine if you don't want to trade anything. If you want to stay on the sideline, I think it's fine. But for me, itchy finger a little bit, try it out, and normally after the OPEX, it tends to be weaker as well. So yeah, I'll have a short position in Nasdaq, and yeah, I think that's about all. Okay. That's about all. I think with that, I hope you guys enjoyed this session. If you learned something new today, okay, please type value in the comments. If you enjoyed my sharing today, please type value in the comments. Okay, I think not too bad. I share quite a number of new things here. Okay, I share a number of new things. Again, why the market tends to go up before the OPEX. This is an oversimplified thing. It's a simplified version. Okay, there's a lot of moving parts around. Okay, Ken? Right, to say, hey, I like say one, something like that only. Okay, roughly, you know. Okay, Ken? And then this extended the move, distance away from moving average, and the sector rotation. This is the RRG. I think there's one month trial. You can just try out for 1 month, 2 months, whether you think it's fine, useful or such. Okay. I think with that, I thank you guys for staying with me, and I hope you guys learned something new today, and have a good weekend ahead. See you guys again next week. All right. Thank you. Bye-bye.